Well, the overall market, depends on what market you want to talk about. Like the U.S. market is really the key market on the planet, and it's been on fire for the last couple of years. Everyone knows that. So, but it's now rolling over, in my view. I think we're likely going to see, a fairly large decline in the stock market sometime later this year, and that could bring all stocks down, even the mining stocks. But if you go back and look at what happened in 2002, 2003, and also in 2008, 2009, the first sectors that actually moved were the mining sector, were the mining stocks, and they have over the decades have always proven to be really, the place to be to keep your wealth somewhat intact, and it's worked for me for 35 years, but you have to be nimble. You have to trade these stocks, and you and I have spoken about this before. If you're up 300-400% or 500% on a stock, you should be selling half of it and waiting for that decline, because the mining sector is cyclical, the stock market is cyclical, and you've heard from Rick Rule many times, and myself, that you need to have a 10-year view on investing in resource stocks, because that's how long these bull markets last. This bull market started, let's call it January 2016 for whatever, you could call it December 2015 if you wish. But going out 10 years from that point, you're in 2025. And that's kind of the time frame that I'm looking at. So, I wouldn't be looking at this time to be liquidating. I'd be looking at opportunities to be buying. I look at this as more of a longer term cycle than just a trade like that. I compare this to really 2000, 2001. If you go back to, the dot-com bubble and the Y2K, probably your listeners don't remember what Y2K was, but that was a pretty funny time. And it's very similar to, the SPAC market. The similarities between SPACs and Y2K are just phenomenal. And so here we saw the Nasdaq go up 100% from 97 to 2000, peaking out at 5,000 in March of 2000, and then everything just crashed from there. And within 3 years, the Nasdaq was down 80%, and it wasn't until 2015 that the Nasdaq actually went through 5,000 again. So it took almost 12 years for the Nasdaq to reach its old high. And that's the kind of market I think we're going into. And that's when the miners and the metals just exploded. And we saw silver go from $5 to $50. We saw gold go from $250 to $1,800. We saw copper go from 60 cents to $4. We saw uranium move up to 140. We saw oil go up to 140. We saw real estate prices take off. There was this huge inflation trade. And it started off as really an asset trade, because the market, the big institutions, the big money out there realized, hey, we've been buying crap. All we've been buying is business plans without any backing, like SPACs, for example. So they just got tired of it, and then they blew all this stuff out, driving the Nasdaq down, as I said, by 80%. And all that money flowed into real assets. Real estate, oil, copper, silver, gold, and mining stocks, and so on. And I think we're halfway into this, and we've got a long ways to go yet. I do, because they're very cyclical. We went through a pretty gut-wrenching bear market from 2012, where it started, all the way up to really 2016. That there's nothing different between the bear market from 97, call it, to 2001. But the bull market started in 2002, and it lasted until 2012, 10 years. But over that 10-year period, there was many corrections. There were several times over that 10-year period that the executives in the mining sector thought the bull market was over, but it wasn't. It just it corrected for 6 months, and sometimes gut-wrenching corrections, and then boom, it took off again. And that's the kind of thing that I think we're into right now. We're just in a short-term correction in a much larger bull market. But as I said, investors who invest in this space, this is a very risky, very cyclical, very volatile space. And you never know when the bull market's going to end. despite my view that we're, 10 years, it's going to be a 10-year long bull market. I could be wrong. So in that case, you have to take advantage of, movements. If you're buy a 50-cent stock and next thing you know, it's $3. And that's happened many times to you, I know, Jake, and it happens to me as well. And then when it does, you just have to be disciplined. You sell part of your position. Despite your views, you may think the stock's going to go to $10, but you have to be prudent. Take your money off the table, even take a little bit of profit off the table. Take your position down by 50% or 75% and wait for that correction. If it doesn't correct and the stock keeps going and you sell your balance at some other higher price, so be it. You've made a lot of money, and then go on to the next company. Just don't fall in love with your investments. And always when you buy, pick your price and that you're willing to pay for it. And also, as you're buying, visualize the price that you want to sell it at. And a lot of people don't do that. And if you do that and remain disciplined, you'll find that you do quite well over time. Because most people are not good sellers. Selling is the hardest thing to do. We're not trained to sell. We're trained to buy. We have credit cards quite young. Where we like having toys, we like having stuff, right? So we're always looking to buy things. When we turn around and sell something, we often just give it away because you don't have the energy to sell it. You got a Chesterfield that you want to get rid of. You put it on the street corner and someone will pick it up. It's kind of crazy, right? Or if you have a television, you want to buy a new television, give your old one away to your brother or something. So you don't expect to really get much from things that you buy. So you're not programmed that way. But investing, the only reason why you invest is to make a profit. Yeah, it's interesting. There's a whole Reddit Robinhood short squeeze play that took place over the last couple of months. Was quite interesting because when I put first Majestic together back in 2002, I always assumed that supply-demand fundamentals actually prevail and move the price. I predicted $50 silver when first Majestic together in 2002, and it did hit $50 in 2011. I didn't predict, mind you, that the price of silver would drop all the way down to $13 or $14, over the next several years, which was quite disruptive to the mining sector. We had to, reduce our spending. We had to, fire a lot of people. It was pretty tough for the mining sector to take, gold dropping from 1900 to, close to 1,000, and silver dropping all the way down to 1450. But we got through it, and quite honestly, it's very much story driven.